Hi traders, welcome to ATFX non-farm payrolls preview. I wish you all good luck in the year of the dragon in 2024, good health and good wealth. The US 2024 January NFP will be released on February 2nd at 9:30 p.m. GMT +8. Get ready for the data release and catch the trading opportunity from the volatile market. Last month, the non-farm payrolls reported nearly 216,000 jobs and the unemployment rate remained at 3.7%, beating expectations. The market suspended expectations for a Federal Reserve interest rate cut. Funds flowed to the US dollar, making it bullish while bearish for gold and silver. The three major US stock indexes fell. Oil prices were bullish due to job growth, but the market quickly digested the data. The trends rapidly reversed after the announcement of their DP employment change. On the upcoming 2024 January non-farm payrolls, the market anticipates creating 173,000 jobs, with a slight increase in the unemployment rate up to 3.8%. If the DP employment change is within the expected range of 135,000 and there are any significant changes, then the market's expectations for the non-farm performance might change. Note that the expected value of NFP is already factored in before the announcement. Any significant deviation from the market's expectation may affect the US exchange rates, commodities, and stock indexes. The market is concerned about average hourly earnings and monthly and annual rates that guide inflation. If these rates drop significantly, it may increase market expectations that the Federal Reserve will cut interest rates in March, which could harm the US dollar and boost other currencies, gold and silver prices, and the three major US stock indexes. The following are the recommendations for the relatively volatile trading products. For the dollar index, it is currently on an uptrend towards the 104 level. If the data sets exceed market expectations, the dollar index would test 103.98 or 104.56. If the data sets are weaker, the dollar index would test the lower 103 mark, targeting 102.39 or 102.13. For the spot gold, it has been in a downtrend since last month's NFP. If it surpasses the resistance at $2,061, it will confirm the end of consolidation. This will result in an upward movement towards $2,075 or $2,088. Declines will find support above $2,016.99. A breach of support will target $2,003.30 or $1,989.84. For GBPUSD, it maintained a stable outlook over the past week. If the pair manages to break through the resistance level at 1.2827, it will confirm the end of the consolidation pattern. This will likely result in upward momentum, with a target set at the previous high 1.29. On the downside, a pullback is possible, but any declines are expected to find support above the 1.26 level. Let's look into the crude oil. Oil prices are up due to tensions in the Middle East and ahead of the FOMC policy decision. More robust NFP data and higher average hourly earnings will increase oil prices, while lower than expected NFP and earnings will decrease to $76 or $75. If it goes below $75, it will eventually reach $73.51. For Dow futures, suppose the non-farm payrolls report comes in strong and the average hourly earnings remain average. In that case, the market will expect the Federal Reserve to continue its efforts to cut interest rates. This will result in the Dow futures market being under pressure, which will cause the Dow futures to pull back to a lower level of around 37,000. On the other hand, if the NFP and average hourly earnings beat market expectations, then the Dow futures will test the resistance levels of either 38,343 or 38,424. For NASDAQ 100, upbeat NFP and average hourly earnings may lead the Fed to cut interest rates, putting pressure on the NASDAQ and testing a lower level of 17,134 or 17,050. Alternatively, beating market expectations may test resistance levels of 17,770 or 17,856. The above recommendations are for your reference. Thank you for watching the NFP video. Remember to like this video and follow ATFX for more market updates.